Hello and welcome to People in Profit, where we look at how business shapes our world. I'm Stephen Carroll. Coming up, a Modi miracle or just good timing? We look at what's behind India's rise to become the world's fastest growing economy. Gold rush, market turmoil is sending investors flooding back to the traditional safe haven asset. But is gold worth its weight? And a new boom in Bordeaux, the business school that's teaching Chinese students how to sell French wine abroad. First up, though, the latest figures have confirmed India as the fastest growing economy in the world. The country saw better than expected growth of 7.5% in 2015. Now, India has benefited from low oil and commodity prices, but it's also undergoing an economic overhaul led by Prime Minister Narendra Modi. Shona Bhattacharya has more.
A first since the start of the 21st century, Asia's other giant, India, has outpaced Chinese growth. In 2015, India says its GDP grew by 7.5%, significantly more than its rival's 6.9%. Low oil prices are a key driver of India's growth. As one of the biggest oil consumers in the world, the 70% slump in prices has given the economy a major boost. The growth figures are a political victory for Prime Minister Narendra Modi. He came to office in May 2014, promising sweeping changes to the economy and pro-business policies.
Come, make in India.
In under 2 years, his government has passed a series of economic reforms, including legislation that allows more than 50% foreign investment in India's aging railways. Indian construction projects can now accept foreign investment too, as can the large coal mining sector.
I want Indian companies to become multinational and expand their reach to various parts of the world. We want this, but we want to make our own country stronger too. We should take steps to provide employment to the youth. This government is committed to development.
But other reforms have gotten stuck in the mud. A sales tax on goods and services still hasn't been implemented on a national level, and minimum prices for many agricultural goods remain in place. Economists say despite the strong numbers overall, several sectors are struggling, including exports, cement production, and investment. Furthermore, financial gains continue to be out of reach for many of the country's poor. There's also a question mark over the figures themselves. A year ago, India changed the way it calculates GDP. The Statistics Office says the changes are in line with international norms, but they've simultaneously ushered in higher growth rates too.
So how real is India's growth miracle? Well, to talk about this further, I'm joined from London by Madhur Jha, who's a senior global economist at Standard Chartered. Thank you for joining us on People in Profit. So how much really of this pretty impressive growth figures from India should we attribute to the efforts of Narendra Modi in reforming the economy?
But clearly, I think India was, as you know, stuck in a bit of a policy paralysis phase before the elections happened in 2014. And clearly after that, what we've seen is there's been a lot more confidence in the ability of the government to deliver reforms, which had completely stalled ahead of the elections. But also there's been a pickup in sentiment of the local consumer community as well as the investor community to be able to push through some of their own changes. So to some extent, it is attributable, of course, to the elections and to the fact that we are seeing little and small moves being made by the government in terms of bringing about reforms. But I think it feels like a lot bigger change just because there was so little happening before the elections.
So how do you assess the progress, really, of implementing those reforms? Because Narendra Modi came to office with pretty big promises across the board for the economy. How do you feel he's done so far?
Well, I think, of course, we have to remember that Mr. Modi's government still faces huge challenges in getting reforms passed in the parliament. The BJP government only has a majority in the lower house of parliament, which in itself was quite surprising because everybody expected that the elections would result in a coalition government. So even the majority in the lower house was a very big positive. But in the upper house of parliament, Mr. Modi's government does not have a majority, and so it's very difficult to pushed through the big bang reforms that a lot of people were expecting to see after the elections results came through. What I think that they have been able to do is implement a lot of maybe unpopular policies, such as they've pushed through fuel subsidy cuts. They've also reduced the minimum support prices in agriculture, another maybe unpopular move amongst on a more populist scale. But they've also pushed through a lot of other reforms which are helping to improve the business environment and helping to restore some confidence, especially in the business community, that India is open for business.
Now, India's benefited quite a lot from that slump in oil prices too. Is it in for a shock if those prices are going to rise? Not that we're expecting that to happen anytime soon, of course.
Clearly, of course, as you rightly pointed out, India is an oil importing country, and the drop in oil prices has benefited India quite substantially, not just because you've seen a drop in imports, and so your current account deficit, which used to be around 5% in 2013, has gone down to something like 1.5% right now, which is very good in terms of being able to manage expectations about the currency moves, etc., but also because it has helped lower inflationary pressures in the economy. So again, inflation was running over 10% in 2013. Now it's just about 5%. So clearly, both of these together have implied less pressure on the economy, less pressure on consumers. Consumers have more ability then to go out and purchase and buy things. And so clearly, this has been a positive. Of course, if oil prices reverse, it is going to imply that India will have to see a higher current account deficit that will also push up inflationary pressures.
Madhu Jha, Senior Global Economist at Standard Chartered, thank you for joining us.
Thank you very much.
Now, next up, it's been another tumultuous week on global stock markets, with European shares hitting two-year lows. The sell-off was this time focused on the health of the banking sector. Shares in some of Europe's biggest lenders were hammered over worries about loans to the oil industry and the impact of negative interest rates. In times of trouble, investors like to flee to a safe haven. Gold has traditionally been the go-to asset during turbulent times, but is it a sure thing? Kate Moody's here with more. Kate.
Well, Stephen, let's start with a look at just what's happened to the price of gold over the past year. Along with other commodities like copper and coal, it fell sharply in the second half of 2015, bottoming out close to $1,050 per ounce in December. Since the beginning of 2016, though, gold is glittering again. Prices are up more than 10% and have topped $1,200 per troy ounce for the first time since June. So why the sudden gold rush? It comes down largely to uncertainty. Global economic growth, particularly in China, is stagnating. Oil prices have plunged and the US dollar is weaker, which boosts alternative investments like precious metals. There are also question marks about when the US Federal Reserve will raise interest rates again. Higher interest rates can take the shine off gold investments because they don't pay interest, but they do cost to store and insure. Now, gold producers were broadly able to weather the downturn in prices by increasing their output. Mining giant Rand Gold, for example, boosted its production by 6% to a record 1.2 million ounces and saw better than expected profits in 2015 despite the commodity slump. It's also vowed to invest more in exploration, seeing that we could see still more gold mined in the coming year. Supply is just one of the reasons that gold remains a so-called safe haven. That's a low-risk asset which is of long-term value. Other precious metals like silver or platinum have followed a similar pattern, losing value last year but regaining their footing since. Currencies like the US dollar and Swiss franc and government bonds are also seen as generally safe bets, but their value is linked to decisions that are made by central banks. Many people who do invest in gold say they like the idea of buying something physical, something that they could hold in their hands. And that's just one of the reasons that so many do consider gold a 24-carat investment. Stephen?
Kate, thank you very much for that. Next to something else that could be considered an investment if you hold on to it. Wine is a huge export business for France, and breaking into new markets is essential to staying competitive against rival producing countries like Italy. A French business school has taken up that challenge and is now attracting students from China who want to learn about selling French wine back home. Chris Bachman reports now from Bordeaux.
Here on the Bordeaux waterfront, boats used to load up with bottles of wine. Now it's where MBA students are learning about French wine.
35% of value is just from champagne when they don't represent this in Bordeaux.
Not how to make it, but to sell it. In some classes, Chinese students make up a third of the group. They see job opportunities persuading people back home to switch from locally grown rice wine to French wine.
I think it will be a very good start for me to find a job in Bordeaux first, and then I can go back to China to do some wine business between China and France.
There are dozens of classes focused on marketing, branding and selling wine.
This tasting is to show the different approach.
These students are learning how to distinguish between different types of wine grown at the same property. The Chinese are familiar with red wine, but less so about white and rosé varieties. Thanks to these students, that's changing.
We must consider them like ambassadors, because they mainly export these productions, and they teach their fellow citizens there how to be more familiar with our products. So that's a great opportunity and a chance for Bordeaux.
This vineyard's hired 2 Chinese graduates. One of them is Huang. According to her boss, it's been a wise move. They've sold 300,000 bottles there because they know who to pitch the product to and how. Even if the Chinese are the biggest importers of French wine, they still drink 40 times less than the French, which means the export potential for French wine growers is enormous.
That's it for this programme. If you've any comments or queries about the stories that we've been covering, you can get in touch on Facebook at France 24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.